We are officially live, broadcasting only on onedealaway.com/live. My name is Nev. This is Money Matters, and today is Sunday, September 6th. Here we go. Labor Day is tomorrow. Super excited. And today we have excellent and important news and information to talk about, and all of it has to do with crypto. We're going to tell you cool stories about the story of DeFi. If you're curious and don't know much about it, and maybe if you do, you might enjoy my version of what's going on and what has happened. And likely you have heard that there's this DeFi thing and it's really, really hot. So we're going to take a look into one of the largest DeFi exchanges and kind of how it works. So this is going to be kind of cool for newbies or those that are interested and curious of like, how do I use this thing? And of course, we are talking about Uniswap. Now, the story doesn't end there, because we're going to take a bastard child of Uniswap, also known as Sushi Swap, and we're going to tell a cool story of what it is and a giant scam that has emerged and what transpired. So I think you're going to like the story. You're going to love learning about it and how we can protect ourselves from it, and kind of what the new way for individuals who know just a little bit of programming can go out there and make a ton of money in only a few hours, never having to work again, potentially, especially if they know how to invest on the backside of the whole thing. Of course, we're going to take a look at the market. We're going to talk about where the prices have gone and have been going and where they're heading and all of that stuff. So we're going to be taking a look at all kinds of cool and important news, and I think you are going to enjoy the show. And of course, we're going to, aside from just the fun things of what's happening in the DeFi space, we're going to be talking very much in depth as to how cryptocurrencies is solving problems and how it's growing in adoption in some of the developing countries that might be struggling a bit more. So if you are curious about what's going on in the world of crypto, if you want to learn more about how to avoid some of the scams that are happening out on DeFi, if you want to understand the use case for cryptocurrencies and where we are, where we're heading, and how to make and protect your money, well, Money Matters is for you. And if you're watching this on YouTube or somewhere else, may I ask you kindly to like the show, subscribe, hit the bell button so you get notified every day that the video shows up in the feed. And I also want to welcome everybody who is watching this live on onedealaway.com. Feel free to sign in, say hello, ask questions. As always, we're going to do Q&A at the end of the show. All right. Let's do this. All right. Welcome. Super excited that you are here. So let's get started. Let's get cracking. We got a lot of things to talk about, a lot of things to do. Let's get started right now by looking at the market. So here we go. Here's the market. What's going on? Well, it's sort of a mix, right? We yesterday when we looked at it, it was mostly red. Now we're seeing a mix of a little bit of red, a little bit of green. What's going on? The top two guys are definitely down, with Bitcoin being at $10,243.10. Thank you very much. And Ethereum being at $353.23. Thank you very much. Now, of course, as we take a look and kind of scroll down, you will see that there are definitely some green, some red, some double digits, some single digits. So let's take a look at what's been going on in the last 24 hours. Que pasa, as they say. All right. Hedge trade up 25%. Binance Coin up 15.3. Yearn Finance up 15.13 to 24,906. BitShares up 14%, and then we go into single digits with Thorchain, Blockstack, Bitcoin SV, Sushi Swap, which we're going to be talking about a lot and why it went up 6.01%. So you want to stay tuned for that. Zcash, IOTA, and so on and so forth. And now let's take a look at the largest sort of negative trend, biggest reds, and UMA is down negative 12.84. Um, Arweave, again, I have no clue what this one is. 12.6. Elrond, negative 10.97. So let's say 11%. Cello or cello, or I don't know how you say it. I want to say cello, but that's just my language and skills coming from back home. Negative 9.5. BitTorrent, negative 9.5. Ampleforth, negative almost 8. Balancer negative 7, and then it kind of goes down from there with Numera, Decentraland, Argoland, Digibyte, Terra, and so on and so on and so on. So there you go. That's what's going on when it comes to the prices. But now, let's take a look at some of the articles of what's going on, what's been happening. And the first one of those is that I want to talk about the case for crypto. And this particular article was very cool to find and locate because it does a really good job of explaining how cryptocurrencies are seeing a large adoption in Latin America, and it highlights the importance of this new asset class, new way to store and transfer wealth from individual to individual, and of course between businesses, individuals and businesses, and so on. And so I think it's a very, very important piece. Now, one of the things that you likely may know about many countries in Latin America are struggling with um, uh, their currency devaluation, a lot of uncertainty, I think, around the world. So let's take a look at what cases they are actually sharing in this article, because I think it's very, very important for us to understand just sort of a big picture, especially as the Bitcoin is dumping, right? And things are not necessarily going as well as maybe we would all hope for. I think this gives us sort of the big picture thing of like, where are we going? And it's very, very bullish. Okay. Recently published research indicating how unbanked individuals and businesses in Latin America are using cryptocurrencies as a speculative investment, a store of value, and a means of exchange. And of course, you could do both. Banking in this issues and the need for remittance are two factors that drive unique pattern of crypto usage beyond the speculative investment. Wait times and high cost of remittance is a big problem, and digital currency can be moved instantly overseas without high fees, with 90% of cryptocurrency received by Latin America come from outside the region, with vast majority coming from the US. Now, we've talked about this when we talked about the huge adoption of cryptocurrencies in Mexico, for example, but this expands it beyond just Mexico, and it takes it over to basically an entire continent at this stage, right? And so we kind of take a look at this stuff, and of course you have individuals who are here in US or maybe Western Europe or Asia, whatever, right, that they're working, but they have families in Latin America, Eastern Europe, Africa, community that may be struggling. Maybe it's not even the community that is struggling, but the family needs money, right? These days, we're all could use a little bit of help, and all could be providing a little bit of help to our families. And likely you're like, yep, I've heard it, I've seen it, I've done it, I'm doing it, I need it, whatever. So this is one of the use cases that it's kind of happening. So right now, to send money over, you have to deal with the banks, and if they don't have a bank, then they have to use Western Union. The fees are very high. Even if they have banks, the fees are very high. And so what the crypto does, it really solves that part of the problem, because it allows you to transfer within minutes, sometimes seconds, sometimes an hour, But again, that beats days or weeks, right? And, you might have to spend, I don't know, $2, $5, right? Which beats $20, $30, 5%, whatever, right? So I think it's an important aspect of it. Now, safe store of value. Businesses and individuals are unable to get bank accounts. Sometimes businesses just don't do enough volume. The banks don't want to pick them up, or if they pick them up, they charge ridiculous amounts of fees. So I'm going to pause here for a moment and bring us back to United States and tell you sort of my story, right? Starting a business can be very challenging, especially when you're trying to start it with minimum debt or no debt, even better. When you're trying to start it without the VC funding so that vulture capital doesn't infiltrate you and you're trying to kind of hold on to the stuff. And I'm not saying it's the best way, it's the only way, but it is a way. And so every penny counts when you're starting a business, right? You want to save on every single thing, but you have to open a bank account as a business, right? Because how do you process stuff? How do you accept checks and all of the stuff? It has to land into some sort of bank account, right? We all agree with that. So now the problem is, depending on what kind of business you're in, you may or may not be even able to open a bank account. And I know you're thinking, like, well, if you go into illegal business, Nev, then of course you can't get it. It's not necessarily even about illegal business. For example, let's take the dispensaries, right? Like the marijuana dispensaries. Each state can decide that this is legal or not legal. And so if you are in a dispensary business in, say, Arizona or Massachusetts, where it's legal to be there, legal to have it, legal to run the business and sell it and so on, because you got all the licenses, you're not breaking any laws. The problem is that the federal government does not still recognize it. And the banks are sort of guided by the federal. So now you need to be a cash based business only, or you could use crypto, right? So that would be one case where potentially could be challenging. The other one could be that you might be doing something or saying something that they don't like, and so then they just sort of like shut the door to you. Maybe you don't have high enough balance. That's another problem. And so they're saying, unless you have a daily rotating balance of 50,000 or $100,000 or 2,500, whatever, right? Different balances, you no longer can bank with us. Well, guess what? You might be doing good business, but maybe because you're just new, you're just starting, you can't quite get that business bank account. The other part of the problem is that they're charging very high fees for everything that you do. As I always joke, the moment it's business and the moment it's commercial, anything, the prices just skyrocket and it makes no sense. Um, and so, the while you can get a free checking account as an individual, it's increasingly more difficult to do that as a business unless you carry very, very high balance, daily average balance on the books. Well, again, if you're a brand new business or maybe your business is not quite there yet or just whatever, it's going to cost you a lot of money. So that's part of the problem. And when I was talking about the commercial, I'm talking about like within a real estate. If you try to get a residential tile, it's like, 15 cents. Then you're like, all right, I'll get commercial tile. They were like $1.50. Well, how did we go from 15 cents to $1.50? What's in this tile that it's not in that one, right? So I get it. Part of it is quality and that kind of stuff, but not always. Anyways, let's digress. So you do have businesses, individuals that are unable to get bank accounts. And now with easy banking access, several young people in the region are turning to cryptocurrency as means of storing value. And stablecoins like USDC and DAI are playing a huge role in this particular process. And we're seeing this not just in the Latin America, but I see this use case all over the world, even here in United States, where you can actually go in and still transact, still do business, right? But be able to actually do this stuff, and now you can actually store the value so you can keep it in something. And if you don't know much about USDC and DAI, they're basically stablecoin that monitor, mirror the dollar price, right? So $1 in physical world is $1 in the crypto world with these. Now, DAI is the centralized version of it. It does fluctuate a little bit. Sometimes it's slightly underneath it, slightly above it. But on average, it tries to kind of have this $1 hold. USDC is centralized version, and it basically sits at $1 all the time. So you can choose between the two, a little bit of one, a little bit of the other, right? Or, all in one. It doesn't really matter. And then from there, you can easily transfer. So you don't even have to go into things like Bitcoin or Ethereum or Sushi or Wi-Fi or Ren or any of the stuff if you don't want to, but you can should you desire to, right? So that's the cool piece about the whole thing. Currency instability. Now, this is a very big case for developing countries that don't have as strong of a currency, that is going through a lot of manipulation, a lot of printing, maybe a lot of devaluation. Not saying that US dollar is not getting some of that stuff, but being the reserve currency makes it a little bit easier for the US, whereas in some of the parts of the world, like Venezuela, for example, Zimbabwe, Turkey, those kind of places where they have been seeing much, much higher, Lebanon comes to mind as well, right? Where they're having much higher inflation, this could be another way to sort of, protect your wealth. Crypto users in Chile, Colombia, Uruguay, and Argentina are turning to cryptocurrencies as means to store value when their national fiat currencies are losing value. Argentina and Venezuela are especially printing money like crazy, so their fiat currencies are losing value. This drives a lot of crypto adoption. Some nations, like Argentina, limit the amount of US dollars citizens can buy per month, which further limits their option for secure savings. Worsening economic conditions and related civil unrest also drive crypto adoption. People just want to a safe way to store money, and so you're able to actually go in, put this money in it. You get the USDC. It follows a dollar, so even if you can't transfer your money into a foreign currency like a dollar, for example, that might be much more stable than your local currency, then this provides with an access for us to do that stuff. Very, very important. There's also a strong trading and speculation market in the region. Brazil accounts for the most crypto usage by on chain volume. Venezuela seems to be a distant second, but its role becomes much more prominent at person to person, peer to peer trading volumes. A desire for potentially high yield assets with uncorrelated returns is fueling crypto adoption among professional investors, and that's happening not just in Latin America, not just in Europe, but around the world. People are jumping into this stuff, and we're going to be talking about this stuff in just a moment. Many traders use fiat like to buy Bitcoin or stablecoin, then use such funds as an on ramp to large exchanges such as Binance, where they can access more trading pairs and greater liquidity. And then, of course, they can also go to decentralized exchanges, also known as DEXs, that we're going to be talking about in just a moment, to then do all kinds of crazy things. In Latin America, many people fell victim to crypto scams and still fall victim to crypto scams, but illicit transfers in the region currently appear to be on a steady decline. And of course, that makes sense. As people become much more educated, much more aware of what's going on, they start paying attention for those things because, once you touch the hot stove and you get burned, you're not touching that puppy ever again. You quietly and carefully, scared but carefully, approach it. Put your little hand above it to feel if there's a heat, and then slowly kind of like tap it, see if it's hot or cold, right? You don't just, slam your hand on it. So we learn by doing it and by hearing from other people. So that's why we're here. I'm going to learn potentially of a possible scam, and I'm still gonna say that it's a scam. The project itself might not be, but the founder definitely was a scamster. Just my personal opinion. You let me know what yours is. All right, let's start peeling the onion. Peeling the onion as we get ready for our meal. I don't know what it is, but there's these like food names that are popping up. Spaghetti, sushi, yam, yam. So, and it seems like every food-related project is there to steal your money somehow. I'm not saying they all are. I'm just saying, there's a bit of history here, okay? That's all I'm saying. There's a bit of history that some sort of something with the food project ended up having a bit of rot. That's all I'm saying, okay? Here we go. Bitcoin price indecisive above 10,000 as DeFi coins bounce on Sushi news. And we're gonna talk about sushi news and the entire sushi story. Stay tuned. Let's peel the onions. Get ready for that sushi. Yum. Yesterday, Bitcoin bottomed at about 98.25 on Binance, and it recovered some ground on the next few hours to approximately 10,200. As you saw, it didn't recover much more from there. It could test the next support lines if it continues going down at 9800 and then 9600, which also means that it's going to fill a CME gap from July. Now, it has to reclaim first resistance at 10250 to head on upwards. We haven't quite seen that, so we don't quite know what it's going to go. Personally, not a financial advice. Nothing I say here actually is or should be used as such in today's or any other episodes in the past or future. Do not take anything I say as financial advice, please. And thank you. If you need a financial advisor, find one. Better yet, study, think for yourself, make your own decisions. But what I do want to say is that for me, I kind of actually am liking that it's slightly below, because as all of these cases kind of mount up and it has a potential to kind of go up, it gives me an ability to acquire a bit more at a slightly lower price. So, would I sell the farm? No. Would I sell it when it dumps? No. So you're just gonna, for me, it's taking in a calculated approach of slowly accumulating to it. Every so often taking a little bit of profit from some of the other projects just to kind of preserve my capital, utilizing stable coins like USDC and DAI. I actually like both. I like both because it kind of spreads the risk a little bit. One is fully centralized. I don't know that I'm crazy about that, but that's okay. The other one is fully decentralized and relies on small contract, and I don't know that I'm super as crazy about that either, right? So I do 50-50, roughly speaking. That way I'm like, well, it's a stable coin still, and I pull a little bit of money out. And so, for example, when, Band went up, pull a little bit of money out, so it's now back to down. I can use money now to buy it at a discount and let it ride back on up. I'm not saying you should do that. I'm not saying you should use that protocol. I'm just saying that's kind of how I think about the whole thing. So, now, what's going on with the DeFi? Well, I'm going to give you a brief story right now, and then we are going to go deep, deep, deep into Sushi and Uniswap in case you're interested to learn about it. Sushi, the governance token of the popular Uniswap fork SushiSwap, has plummeted in the past few days. The lead developer of the protocol sold his tokens and crashed the price as Sushi reached lows around $1. Today, he announced that the time clock admin clock has been transferred to the CEO of FTX, and the price jumped, bringing a lot of DeFi tokens with it. Overall, on a 24-hour scale, all of these tokens are charting serious losses, most of them in double-digit territory, but they have gone up from that super big dump for the moment. Total market cap recovered about $7 billion since our last update, but is still down about $50 billion in the past 4 days. That is a lot of money gone. But is it really gone? Well, who knows? It might likely have landed in somebody's pocket. And let me tell you, whoever the chef Nomi is, well, his pocket is a whole lot thicker. Now, let's go in and learn a lot about what's going on with this sushi stuff, Sushi Swap. In case you're curious, let's dive into it. All right. So here we go. This gives you a nice, cool story, and then we're going to go a little bit deeper and deeper. We're going to be peeling onion layers here. DeFi craze is far from over. I agree. And then you have the unfortunate rug pulls, which we're going to explain in a moment, basically scams, and a few decentralized exchanges protocols launched just recently has locked up over $250 million worth of value in the first 24 hours in existence, and this is not unheard of. This is pretty much normal in DeFi these days. Now, brings us to Swap. So, to put it bluntly, SushiSwap is a clone of Uniswap with some bells and whistles attached. Uniswap is the decentralized exchange. It has become a powerhouse, processing over 100,000 transactions each day. And if you want to learn more about how to use it, how it all works, Stay tuned until the end because we're going to go into all of that stuff. The key difference between Uniswap and SushiSwap is that the former has no crypto, Uniswap, and the latter, SushiSwap, does, named Sushi. The coin was created to incentivize liquidity to migrate from Uniswap to SushiSwap, and it also provides its holder with dividend with 0.05% of every transaction made. The developers have also added a governance function, which is different than Uniswap, which is centrally controlled by a company and its investors. Although the term SushiSwap was only first mentioned days ago, and the protocol contract only went live on Ethereum on the morning of August 28, so just about less than a week, right? About a week, the exchange has already garnered much traction. The contract that yields Sushi by depositing Uniswap liquidity has 300 million worth of cryptocurrency locked up, mostly made up of Tether, USDC, Ethereum, and DAI. The SushiSwap contracts technically haven't been audited by any notable programmers in the Ethereum space. Yet again, similar what happened with the previous one. But the leading smart contract auditor, Quantstamp, is purportedly working on an audit right now, although nothing is being published. There were and still are some fears on Twitter that there was a backdoor in the contract that could allow smart contract operators to steal the $300 million locked in the contract. But nonetheless, they put it in there anyways. Founder of Synthetics found that a wallet affiliated with the leading crypto exchange, FTX, deposited some capital, potentially verifying that the contract is okay to use. Now, this is first story, but it doesn't end there. Hold on, liquidation. Properly teamed, properly named for what is about to come. You definitely want to listen to this one. So now let's go deeper into what is really SushiSwap. Part of its popularity comes from the fact that $250 million was locked in its smart contracts within 24 hours of its release. This mirrors another DeFi protocol, YAM, which has gained a lot of hype but was later destroyed by errors in its smart contract. One line of code that was wrong and it had to be destroyed with all of the money locked up in the contract as well. And the YAM also wasn't audited. So, right? Talk about the risk. So what we're learning here is I don't know that you want to bet on something that is completely unaudited. Like, I think if you put small amount of money, cool, but it's having somebody else look at it is very, very important, okay? Now, SushiSwap is spearheaded by an anonymous group or individual known by the moniker Chef Nomi. Project's background can be understood through its parent, Uniswap. Uniswap is a blockchain-based protocol powering the exchange of Ethereum-based ERC20 tokens. We're going to talk more about Uniswap in a moment. SushiSwap is a hard fork of Uniswap with added community-focused features. Fortunately, instead of curving its own path, the protocol is out to milk its parent liquidity. Ouch. So parasite, basically a parasite. SushiSwap is a parasite. Congratulations. It finished 250 million on the first day of existence. It fished 250 million dollars from Uniswap. 3 days later, it had milked roughly 80% of liquidity from its parent. That's a parasite right there, right? I don't know how else to call it. Now, however, the ecosystem works is divided into two phases. In phase one, involves traders staking liquidity pool tokens from Uniswap and getting Sushi in return. Next, traders shift the staked tokens and use them on SushiSwap decentralized exchange. On Uniswap, liquidity providers earn from trading fees generated on the network, but the spin-off looks to make it better by providing more incentives. On Uniswap, 0.3% of is equally shared among a pool liquidity providers, right? Of what kind of the fees of the trading fees, right? Sushi Swap, on the other hand, a proportion is distributed 0.25% of the pool's trading fees to liquidity providers, and then extra 0.05% is changed to Sushi and spread to the token holders. So you still get 0.3%, but you get part of it, you get pool liquidity, and part of it, you get the Sushi token. Yam Finance or Yam Finance, I don't know why I call it Yam. Yam, yum, yum, yum. Yam Finance is one of the new DeFi protocols that attracted $600 million in assets within 2 days. The project was later shut down after a line of code in its contract revealed a gapping flaw. Just like Yam, Sushi code is not audited. Sushi Swap Master Chef portrays that all is well. The audit of the smart contract will be completed before large-scale deployment, and some security measures deployed to prevent malicious attack include admin function time clock. This is an innovative way to lock any admin initiated activity to wait time of 48 hours before execution. It has a good UI and blah blah blah. It looks good. There's not much happening. So this is this particular thing. Then we get into something new that has transpired. And this is like a developing story that has happened over here. And this is the reason why I'm saying not only is it a parasite, but it's also a scam. And here is where the scam comes in. Chef Nomi, the pseudonym creator of Uniswap-like DeFi protocol, today transferred his control to the CEO of crypto exchange FTX. Now, I'm going to pause here for a moment. I don't know any of these people. I'm going to put it out there. I don't know any of these projects. I don't own any of these projects, nor do I think I ever want to. It could change, but for right now, I don't. FTX had deposited money into the protocol and was one of the largest sort of quote-unquote investors in it, right? The Chef Nomi has basically decided, well, I'm going to transfer this protocol to FTX, to Sam Bankman-Fried, whatever. Sam, FTX CEO. Let's go with that. Nomi had angered the Sushi Swap community by withdrawing the $13 million from Sushi liquidity pool on its decentralized exchange. So what happened is that, everybody went in, right? Filled in the thing in the hopes that they're going to make mad money. Then he, as the admin, as the holder of the keys, basically drained the liquidity out of it, transferred it all to his personal account into Ethereum, locked it over there, and went away. Well, people got mad, right? Because you took their money. Of course they're going to get mad. So then he was like, and so they were saying that, wait a minute, this is that, he's pulling an exit scam. And he was like, no, that is not what I'm doing. All right, good night, y'all. So he went to sleep, I guess. People are still angry. I still say that it's an exit scam because he took $13 million. Now, I don't know if it's 13 million because the article here says 13, but later down in the article says 12. So I have no clue how many millions were taken, but allegedly a lot of millions were taken out. The story continues. Then finally awake and forced to confront the mounting outrage, Nomi gave the admin keys to Bankman-Fried, so the CEO of FTX, who hours prior tweeted, Nomi sucks and hurt the community. And if Nomi doesn't step down, it's over for Sushi. Well, it could be over for Sushi. Why would he care? He just basically took all the money out of it. Bankman-Fried thanked Nomi for giving him the keys, laid out his plan for Sushi Swap. He said it's going to be multi-sig address controlled by leaders elected by the community, and after that, it's going to be back in the community hands, blah, blah, blah. And then Nomi, the individual, whoever he, she, they might be, I don't know, basically then said in a tweet after transfer control, I hope Sushi Swap does well without me. Again, I did not intend to do any harm. I'm sorry if my decision did not follow what you expected. And I'm thinking, right, like, what did you expect? I mean, a random person puts something out there, controls the whole thing, right? it's not audited, it's not anything, and of course he's going to take the money out. And again, I don't know why I'm saying he, it doesn't have to be he. um, and so now they can just walk away from the entire piece, and if they know what they're doing with their investing, they never have to work again. They can retire right now, and just live off of a very small portion of this stuff. But who knows? Who knows? And we don't even know who it is. So I think people kind of like the whole anonymity. But the problem is that you can have the same person then, if they know what they're doing, can do the same exit scam, three times over, and you would never know it whatsoever. So anyways, things to be very, very careful about in the space. The token price of Sushi spiked after the announcement from $1.24 to highs of $3, after the announcement was basically stated. Now, of course, people were saying that, hey, will you return the $12 million, right? So that's what I'm saying. I don't know how many millions, because as you saw earlier, it said 13, now it says 12. So I don't know, but people are saying, hey, are you going to return this money? Like, what are you doing? Of course, he's not going to return the money. Why would he do that? That doesn't make any sense. But people are, saying, oh no, I had some bad sushi. Now I'm feeling sick. Well, be very, very careful of what sushi you take, right? So, we talked about sushi, we talked about Bitcoin. Let's go in and take a look at Uniswap, a project that's been actually in existence for a little while and seem to be performing really well. So, if you're saying, I don't know how I feel about this whole sushi piece, maybe I should stick to Uniswap. Here is kind of how it all works. So, it is safe to say that the hottest crypto trend is decentralized finance or DeFi, and that's true for 2020. New DeFi projects are appearing daily, and it does not bring a certain 2017 like appeal to it, where we get some scams, some real things, and we're seeing all of that happen, right? Uniswap is a protocol that enables buyers and sellers to swap ERC20 tokens without having to use an exchange or an order book. It uses an algorithmic equation that determines the swap rate based on the balance of both tokens and the actual demand for them. User-friendly interface allows traders to swap their tokens, automating liquidity provision. This is no regular exchange. There are no buy orders, no specific listings, and anyone can add liquidity for a particular pair on Uniswap. They can just as quickly take that liquidity away, making it particularly hard for you to swap back your tokens. This is why it's essential to make sure that the liquidity for the pair that you want to trade is locked. Two main domains that you will be entering into Explorer are uniswap.info and uniswap.exchange. Uniswap.info is where you track the data on the exchange. This is how the initial interface looks like. And as you can see, it has an ability to kind of search. It gives you sort of the graphs. It's beautifully pinkish. There's the little unicorn thing happening up there. And it just kind of gives you a little bit of volume, transactions, what's going on. It's very easy, very pretty, kind of simple to use. But if you want to trade, then or swapping, then you can go into uniswap.exchange, and that is where you'll see something a little bit different, right? So it's going to be this sort of like black thing going on. There's like version 1, version 2, connect the wallet, what you want to swap, do you want to go into the pool, all these different things. Now, first thing that you want to do is you're going to connect the wallet. Most people on the desktop will use things like MetaMask, but you can use Wallet Connect, Coinbase Wallet, Formatic, and Portis. As soon as you've connected it, you can begin swapping. In the first exchange field, you have to select the token you want to swap out of, and in the bottom, you choose the token you wish to receive or swap into. Some of the tokens might not appear on the list, but you can add them manually by pasting the contract address from Etherscan. So if you don't know how to do that, then just don't do it. But it's a very simple thing. You go to etherscan.io, you find the token that you want, you find the contract address, copy the darn thing, paste it into the thing, and it should pop up. Again, if you don't know what you're doing, then just stick with what's in it. And maybe watching a few videos of how to do it could be helpful, okay? So before you execute a swap, there are a few things you should consider. One, is the slippage tolerance, and it's the overall deviation of the expected number of tokens you would receive. So if you select 1% slippage, you might receive a number that might be 1% lower or higher than the initially displayed. So in this particular example, you can see that we're going to swap a zero point 0.1 ETH into Ampleforth. And right now it's saying total estimate is 64.55 or 5463 to be exact. But they're saying, well, you could receive 1% more, 1% less. So they're saying minimum that you're going to see right down here is 63.9 ample. So that kind of gives you what the worst case scenario would be. Then you're going to do into the transaction deadline, and you can set that up in your transaction settings. You could the absolute maximum time that you're willing to let your swap be pending. So you can see over here that the slippage right here is set as 1%, but you can change it. And transaction deadline is 20 minutes, but you can change it. And of course, you can have the dark mode, the light mode, whatever, right? So in this case, it's set for 20 minutes, and if the transaction pending for longer than that, then it's basically reverts, it cancels, and that's that. It's done and over with. The price impact indicates the difference between the market price and the price estimate due to trading size. So if you're swapping larger amounts, you want to pay attention to that. Once you're happy with all of your settings, just hit the swap button. Then you're going to hit the confirm swap, and then your wallet is going to pop up asking you for yet another confirmation, and this is where you can alter the gas price as per your preference. Last thing you'd have to do is set up the gas for the transaction, and you would do that in your wallet. If you're using MetaMask, this is how you would do it. First window will pop up, will confirm the swap, will be this window. As you can see, it's saying, hey, from this account, it's going to go into this account. This is what the swap exact is. This is what it is in dollars. Here is the gas fee. Here is the total that it's going to cost you, right? And you can see what the gas fee is. Now you can click on this little edit button right here, and it will take you into the advanced. From the advanced, you're going to go and customize, right? As the basic is going to pop up, you're going to click on advanced, and now you can actually set your gas price and gas limit and be able to kind of do this piece. You can set up the GUI and the gas limit depending on your preference. After that, it will be moved to pending on Uniswap and executed if possible. If something happens and the transaction fails, it will be refunded and no funds will be taken from your MetaMask. Now, a couple of things to pay attention to. Be aware of bad actors on Uniswap. Tremendously large number of scam projects impersonating legitimate ones. So there's new project because it's decentralized. Anybody can go and list it. Anybody can go and do stuff. So a lot of times they will list something that doesn't even exist just to get some money and then get out. So you don't want to do that. The other one is you're going to get fake smart contracts, fake projects, smart contracts impersonating real ones. So they're going to appear real, but they're not going to be real. They're going to have the names and all the stuff that you're looking for, but it's not going to be a real thing. As soon as the majority liquidity provider decides, people put money in, then the person that put in this fake contract can pull the liquidity out of the pool, leaving the users at a loss. This is known as the rug pull, right? They literally just go, whoom, and you're done. You're out. You no longer can trade it back out. So what you want to do is to prevent this, to always double check the token's address in Etherscan to make sure it's the real one. And for the new projects, what you want to do is you want to go and check their website, see if they actually have a website, if the website talks about what they're talking about here, if they have a Git, and you want to go onto the GitHub and check it out there as well, and to see if they're talking about it. So you want to do a little bit of due diligence here, okay? Now you want to also pay attention that there are high gas fees. Ethereum gas fees are skyrocketing because of the heavy network usage, and this makes it very, very expensive to use Uniswap. And so, you could cost you anywhere between $20 to $50, $100. I mean, I have heard stories that people are paying like hundreds of dollars to do the transfers and stuff, because when you're doing the multiple swaps and that kind of stuff, especially with yield farming and that kind of stuff, when you get into that, because you're doing multiple contracts, and every contract has a cost associated with it and many coins, right? And so it adds up very, very quickly. So a lot of times when people are doing the yield farming, that kind of stuff, they will do large amounts of money, right? Because trying to do it with, I don't know, 50 or $100, well, if the fees are going to be 50 to $100, then you lose, like whatever you gained, you lose. So it has to be, your process have to be all in like thousands in order for this to make sense. Uh, Phishing attacks. Some sites impersonate Uniswap itself, and the domain names in this guide are the only two valid domains that you should be using. So it's going to be Uniswap. Let's take a look at it one more time just so that everybody's on the same page. Come on. Here we go. So you want to use uniswap.info or uniswap.exchange. Those are the only two that you want to utilize, right? So to avoid being fished on, right? Somebody appears to be what they're not. In conclusion, Uniswap is a very convenient exchange protocol that requires absolutely no personal information or registration process. It's easy to use and very intuitive. It's essential to beware of bad actors and do your own due diligence and research and check Etherscan to avoid getting scammed. One of the most liquid exchanges on the market, and certainly what the largest decentralized exchange. So there you go. You have just learned another way that you can go and play in the markets, where you get a full control of things. But of course, the more control you have, the more responsibility you have. Okay, but you also have a greater freedom. So you have to make a decision of who you are. Do you feel comfortable having control but also being responsible for everything? Because it's very easy to kind of put money in something like ETF, and then that's easy, right? You transfer money in, ETF does its own thing, or mutual fund does its own thing, or whatever, right? And you just kind of sit there, and if it goes good, then great. If it goes bad, then you have somebody to blame. But typically, when it goes good, you don't get all of the money, and you're also limited of what you can do. When you decide to venture outside of the DAT, outside of your own backyard that it's safe and secure and sort of managed, and go into the forest, you become responsible for all of your gains and all of your losses, right? And so then you have to do more due diligence. But once you have a control over everything, your gains and losses are much higher. So, my number one thing for everybody is that if you want to have more control and potentially make more money, you need to become more educated. If you don't want to get educated, then stick with an ETF, stick with a mutual fund, and leave these things alone. Else, you could potentially get hurt. So, that's it for today. Thank you for watching. Until next time, stay forever money blessed. Do me a favor, smash the like button, smash the subscribe, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.